Hello everyone, this is Jordan. Welcome back to the Daily Gold YouTube channel. If you're new here, welcome to the Daily Gold YouTube channel. Thank you so much for tuning in. If you haven't already, do me a favor, click that subscribe button. Would really appreciate it. Thank you. And as we get to precious metals and our weekly wrap up, boy, last night it was looking like precious metals are about to close a really good week. Silver had finally broken through $33. It was trading up to even, I think, $34.00. But unfortunately, as happens often in precious metals market, that breakout or that surge was reversed in action here in America in the morning. So where do precious metals go next? Well, let's talk about it and let's get to the video. So starting off here, as always, we have the daily candle chart for gold here. Daily candle chart for silver. Here we have the gold-silver ratio. And starting off with gold, we've talked about it in the past videos. This should be support on any correction. Right here, again, call it 2760. We could also put a line just below it, call it 2730 or thereabouts. So gold didn't hit 3,000 yet. It came pretty close. We talked about the targets. So the measured upside target from the cup and handle breakout for gold was $3,000. This rough triangle here was targeting 3050. So we have this big reversal here. Maybe this is an interim top. If this is not an interim peak, maybe we get one last push up to 3000 or 3050. Now, silver. So we can see here silver struggling at 33, consolidating, a couple nice candles here. Then it looked like on Friday we were going to get a really strong close here, close to 34, at 34, clearly breaking through this resistance at 33, but no cigar, no dice. So you have this candle right here, which is a inverted hammer, and these are, they're bearish. So an inverted hammer. What's interesting is we made a similar candle here, and what happened is silver traded down for several weeks before pushing higher and making a higher high. And this actually happened at the end of this first leg where you could say gold started a correction here. It did make a false new high for a day. And so despite the fact that a correction had started, silver was able to push up and make a higher high. So maybe that's instructive for what could happen over the next few weeks. So looking at targets for silver, you do have this gap here. You look at 31, around the mid 31s. This is a clear support level. 200-day moving average, about $1 below that, 30.56 coming up close to 31. So we will see what happens, but there's still a chance that silver could reach 35 after this reversal in potential sell-off. Now looking at the weekly chart, let's dig more into gold. We said last week that 4 of the last 5 weeks had really strong action, really strong closes to the week, but this is starting to look very overbought. Then you get an inverted hammer on the weekly. And why is this important? Well, look at previous short-term or interim or intermediate-term peaks in gold. Look, that's an inverted hammer here. That is an inverted hammer here. This is an inverted hammer here. This is another inverted hammer. So an inverted hammer, when it comes after a rise like this, that's the key. When it comes after a rise like that, that's bearish. Now, again, it's still possible gold could trade up to 3,000 or 30.50. I wouldn't make a bet either way, just because gold, the market can fake you out. I would say it's probably put in a peak, but that's why I'm just leaving it there, because the market fakes you out so often that, and who knows, maybe this corrects for 2, 3, 4 weeks, and then you get a rebound and a move up to 3,000 or 30.50. Now, with respect to silver, here's what I pointed out on the daily chart. We had this peak here, then I went sideways. Peak here in silver. This was also an inverted hammer in silver. Pulled back for a couple weeks, then it made a move to 35. So I don't want to rule out that we could get to 35 or maybe even 37 at some point in the next few months. Silver should find good support if it does correct 28.29. I love the 400-day or 82-week moving average here. That's at 27.38, so that probably hits 28, I would say, 5 weeks or so from now. And so the reason why that's important is when we're looking at silver stocks, assess silver stocks at $28 silver. The problem is a lot of people, they look at silver stocks and they assess what is everything worth at $50 silver. And of course, anything with silver in the name is going to be worth more at $50 silver. But we're just below 33 now. Use $28 silver when you're assessing and evaluating silver stocks. And so it's good to see that the 400-day is almost at that point. And we can see on this chart and here as well, the weekly line. I mean, look at the 400-day moving average, support. And who knows? I mean, if silver corrects and it falls through 32 on a weekly basis, can't get back above it, then you could see at some point it could come down here and test the 400-day. Now, with that in mind, here's my little sponsor message for our service at TheDailyGold.com, the Daily Gold Premium. And for those of you who own mining stocks and you own juniors and you want to get more guidance and expertise as far as what's going on in the sector, I would consider or invite you to consider our premium service. It's highly affordable. You can go to thedailygold.com/premium, scroll all the way to the bottom to sign up. It's really affordable. And in every update, we have a top 10 company list and table, a watch list company table as well. We updated the top 10 company table in the notes that go with it 2 weeks ago. And so the notes are like 150 to 200 words of just everything that's important for these companies, their value proposition, what they're doing right now, what kind of targets they have over the next few years. And something I'm going to do in the next few weeks is update these as far as what's the upside potential over 2 or 3 years. I think the last time I did that was about 6 months ago. So I'm looking to update that. We do a comprehensive weekly update every Sunday. And we also have a company reports file. So again, as soon as you become a subscriber, you can log in, you can download the company reports file, you can look at the last update, you can see the top 10 companies in the notes. You can become familiar with everything really in like an hour or two. You don't need to spend weeks and months trying to see where we stand and what our favorite companies are. So would love to have you come aboard. For those of you who are subscribers, thank you so much. I appreciate your business. And let's move on and talk about the stocks. So we have the GDX here, the weekly candle chart, GDXJ weekly candle chart here, SILJ weekly candle chart. And so they are running up against multi-year resistance. We mentioned this last week. So GDX here, this is 4.5-year resistance at 40.41. For GDXJ, we can see this resistance here comes in about 51. And again, this is 4.5-year resistance. So you had a strong move on the stocks, put in these bearish candles, this one here for SILJ. So that is a signal that we're probably going to see at least a pause or maybe a little correction in the sector. Now, let's look at breadth indicators. And I'm going to look at breadth indicators for GDX, the HUI, but also GDXJ. And my point here with the breadth indicators is the intermediate or medium-term breadth indicators. Those are not as bearish or as close to signaling tops as the short-term indicators. So that's a distinction here. So here we show the percentage of HUI stocks that close above the 50-day, the 200-day here. Now, the 20-day, which I'm not showing because I don't want to have 10 rows of data here, but the percentage that closed above the 20-day a couple days ago was 93%. I think this peaked as well, the 50-day, at 93% a couple days ago. So again, those short-term indicators really close to 100%. Those are a signal that a short-term correction could be coming. Now, more medium to intermediate term indicators, look at the new highs here in GDX, smooth with the 20-day exponential moving average you can see in blue. That came up to 14%, and you can see the peaks last year were around 20%. The major peaks were around 30%. So we're not close to those levels yet. And also, Golden Cross percentage here, the bullish percentage, these are other breadth indicators. And, we can see they've rebounded, but they still have some room to go before they get, to concerning levels as far as the intermediate trend. Same thing with GDXJ here. We don't have as many indicators, but these are custom indicators where we're looking at the top 33 stocks in GDXJ. And we can see here are the new 52-week highs. This is 20%. Again, this is smooth with a 20-day exponential moving average. You can see the EMA 20 right there. So this is at 9%. The peak late last year was 20%. You know, these major peaks were 30%. So this still has room to move up before we could make an intermediate top in the, you know, not really the juniors, but the mid-tiers, because GDXJ is more of a mid-tier index. Here we have the percentage of those stocks above the 20-day, 50-day. Look, 100% above the 20-day. This was 92%. So again, very short term, very strong. Now, percentage above the 200-day, 79%. So again, that is the picture for the stocks. And, you know, last thing I'll mention, consider all those breadth indicators, and then consider that the miners they've reached and they're testing these multi-year resistance levels. So this is an area where they're running into supply and some sellers. So it makes sense. So again, short-term breadth, really overbought. That's not necessarily a bad thing, but you look at that, you look at the bearish candle, you look at the fact that the miners are at resistance, they're likely to pause and correct at some point. But the good news is the medium to intermediate term, those indicators are not at really concerning levels. So long video here, over 11 minutes. Leave me a comment. Let me know what you think. What do you think is going to happen in gold, silver, and the miners over the next couple weeks, next month or so? Would love to hear your thoughts on that. Thank you so much for tuning in. Really appreciate it. And I'll talk to you guys again in the next video. And hope you guys have a great weekend.